Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have a busy week of reports to talk about. A lot of information came out at the end of this week. But to kick things off, let's go ahead and recap what happened and what has happened so far this week on the markets.
Yeah, so when we look at markets, generally I'll say we've been weaker in livestock markets this week. When you look at cash hogs, down a little over $2 for the week. When you look at feeder steers and heifers, we actually started the week steady to 5 higher, but we ended up 1 to 4 lower. I think a lot of that occurred as futures prices for cattle weakened during this week. Both the choice beef cutout as well as the pork cutout values were down for the week. On the choice beef side, we were down $5.22, down $2.45 in terms of that pork cutout value. And you look across the components of those calculations, and we were down across the board in all of the products. I point out on the beef side, loins were down $11.82 for the week. We're still waiting for some significant cash fed cattle trade, but it looks like we're going to be weaker for the week once we actually see some cattle move.
Let's get into the reports. I would say the big one yesterday, obviously Hogs and Pigs report. And I don't know if I'm surprised, but it sure seems like expansion has not in that segment of the market.
Yeah, so we continue to talk about growing sow herds in this country. The report gave us a sow herd that was up 1.5%. That certainly fell within the range of pre-report estimates. So when I think you look at the market moves after that report, it's been fairly neutral as a result of many anticipated this kind of growth in sow inventory. It just reminds me that we are getting a lot of coordination, I guess, between available hogs coming to market as we talk about those new processing facilities coming on board here in 2017. And the report certainly suggests that's the case. So more hogs ahead. And as you look, we're up sow inventories 6 of the last 7 years. So it's been quite an interesting run in terms of higher sow inventory in the pork complex.
One of the other things we talk about is the revision to the pig crop, and we saw it again in the latest Hogs and Pigs report.
Yeah, so USDA revised that June-August 2016 pig crop up 344,000 head. That's the 10th consecutive revision of the similar quarter's pig crop now. So we certainly have been growing in terms of those pig crops once we get the revisions in place, telling us we have more hogs than maybe we initially thought. Those revisions, however, if you look at that 344,000, that's about half of where we've been relative to the previous 4 quarters. So perhaps not the same impact as we've been seeing, and maybe USDA beginning to get closer to what that pig crop number really looks like.
As we talk about the reports and we talk about this, the expansion, and we look ahead to the new facilities coming online, what role does that play into, could we potentially see more pigs as we know that's available and that will be available soon?
Yeah, so I think when you look at what we've been doing in 2017, the first thing that sticks out to me is that hog prices have averaged higher than anybody probably thought going into 2017. And so I think when you look at the previous Hogs and Pigs report we got out in December, many of us might have said, well, we're going to slow that sow expansion a little bit because the economics aren't there. When in fact, as we've gone through these first few months, the economics have been nothing but maybe slightly positive for the pork industry. And I think that gets us a few more sows, all else equal. So we'll need very strong demand, I think, here to make certain that we have the demand for the pork that we're going to be producing. But growing inventories is probably in the picture here for a little while. And again, I'll switch and say, if you're on the processing side of this, you want that shackle space as full as possible. It's the way to make those plants run more efficiently, to make certain that shackle space is as full as we can get it. So that coordination, I think, will continue to tell me that we'll be adding more sows as we look ahead, unless the economic side of the picture gets really bleak as we go through the next few months.
We've been talking about the Prospective Plantings report for probably 6 weeks. 6 weeks now. It came out today. There's been talk about a lot of switch to soybean acres, and the USDA didn't pull any big surprises out of their hat, I don't think, today.
Yeah, no, I agree with you, Megan. You know, when you look at where we ended up, 90 million acres of corn and almost 89.5 million acres of soybeans. I don't think those were too surprising. Maybe a few more beans than some thought pre-report. I always remind us, you know, those surveys were done 2 or 3 weeks ago, and if you think about corn and soybean prices since those surveys were probably actually conducted, it probably does nothing more than give us a little more corn and a little less soybeans than maybe what we got out of Prospective Plantings. But I like, from a livestock perspective, to remind us, you know, if we plant 90 million acres of corn, and we have a decent yield, a trend yield, let's say, that's 15 billion bushels of corn again in the bin this fall. That's probably good news for livestock producers in terms of where feed costs go. And again, we're a long ways from this crop being made, given it's not even in the ground in most cases. But a good crop keeps feed costs much lower than lower than we've seen just a few years ago.
I don't want to say it was a little bit of a snoozer report-wise, but as we look at that, you mentioned, you know, trendline yields, that puts another really big crop in the bin. Is the bigger talk maybe coming out of that grain stocks report that came out?
Well, I think you are seeing some bearish out of that grain stocks report. Both corn and soybean stocks maybe a little higher than we thought pre-report, and I think that's been a drag, especially on the soybean side today. As you look at soybean futures, last I checked, we're down about 15 cents for the day after the report came out. So more stocks and a lot of acres. It just tells me, barring a major weather event now in the northern hemisphere, we're going to talk about feed costs that stay very, very reasonable.
Let's talk a little bit consumer side of things. Restaurant Performance Index came out this week. When we look at that, Scott, what are we taking? What are producers, or what should producers take from that index and that number?
Yeah, so I go number one. I go very important measure. It's one of the demand side indicators that we have that I think is really critical. And as we talk all the time, it's always this trade-off between supply and demand. But when you look at the February Restaurant Performance Index sitting at 100.7, so up again, talking about expansion, if you will, in the overall index. But very interestingly, when you look at the current situation index, so it's overall index is made up of both the current situation and a expectations component. The current situation was actually down slightly. Yet the expectations setting at almost a level I hadn't seen for a couple of years, driving the overall index slightly higher. We need to see those expectations be realized as we look ahead the next 6 months. That's the important read I get out of what I see in the Restaurant Performance Index. If we drag along and talk about a current situation that's continuing to be below 100, we don't need that when we talk about pork production much higher than a year ago, beef production even higher than pork production relative to a year ago. So we continue to set the stage here for that discussion. It's just nice to see, again, a Restaurant Performance Index overall that shows that we're up for the month of February, and hopefully that continues as we move through 2017.
Scott, last Friday we talked about the situation in Brazil. And I think it's interesting that China has not imported beef from the U.S. since 2003. It took them all of 4 days to make the ban for Brazilian exports or beef exports from that country to more specific and targeted areas and reopen trade. What does that mean in the long run? Or maybe more so, what does it mean in the short run for U.S. beef producers?
Yeah, so I do think that when you look at where futures prices for cattle were traded this week, and we traded lower, that, you know, part of that was probably a result of China saying we're going to take Brazilian product again from at least select processors or plants. So I think a couple of things at play here. Number one, last week probably talked about Australia could be one of the competitors in this market. The Australians already have record cattle prices and drought issues that are affecting their ability to jump in that market. If you want to go to the U.S. as an alternative, you're probably going to pay a lot more for that product than what you were getting from out of Brazil. So in many cases, I think we saw some of that loosening occur just because the alternatives aren't that great right now. So longer term, we'll wait and see. I guess in terms of impacts, it seems to me that even though we did see those markets open fairly quickly, we are still seeing some reported stories of slowdowns in a number of plants. I saw some poultry stories where it seems to me that we might be leaving chickens and turkeys in houses in Brazil longer than we should. And some of those things I think will continue to weigh on us as we look ahead. And I will say ultimately it just depends on how quickly we get those countries that import different kinds of meat products from Brazil feel comfortable that there aren't issues in terms of what they're getting. If that all quiets back down as we move through the next couple of weeks, I think the blip will be maybe shorter than I first anticipated. But we'll wait and see how the rest of the story plays out. But I have a hunch in Brazil, it's created some issues in terms of having animals backed up, regardless of species, that we're going to deal with for a few weeks now.
We talk a lot about having big supplies of pork. We talked about big supplies of pork down the road. When we look at the demand, obviously that takes we've talked about the importance that demand remains strong, but is the supply side of that maybe speaking a little bit louder in the narrative right now? Is that story more about what's going on with supply and how it relates to demand?
Yeah, so I guess, as I look at what we've been doing through 2017, the first thing I'll say is that demand generally, I think, has been the story of the day, in that demand has actually been stronger than the growth in supplies that we've seen. And I say that it's both domestic demand as well as international demand. And I think the export side of the market's actually been one of the very positives. Yet you look this week, all right, so the demand side maybe not quite as stellar as it's been. And we continue to say, yeah, all right, beef production year to date up 5.3%, pork production year to date up 2.3%. The supply side of the equation is starting to drive, which is getting us some lower prices. And so we'll hopefully continue to see strong export demand, but that balance is very, very critical. And again, I'll come back to say I think demand has been stronger than we anticipated as we enter 2017, driven in large part by very strong international markets. As soon as that slows down or stops, then I think we get some downturn in both cattle and hog prices that nobody from the production side is very interested in talking about.
Scott, anything else this week?
I think we've covered most of the big stories for the week, Megan.
We will talk to you next Friday.
Very good.
All right. For closing and opening and closing market information, tune in to John Perkins's Market Minute. You can find that at brownfieldagnews.com. You can also subscribe to have our weekly livestock market update delivered to your inbox every Saturday morning and submit questions and comments there as well. Have a great weekend. I'm Megan Grebner on Brownfield.